Hey, this is Jim. It is 5:11 p.m. in San Francisco, California on May the 4th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So I'm going to do a deep dive on Bitcoin, BTC USD, and I am going to also share this publicly, so I'm not going to get into a future forecast, but I'm going to show everyone really clearly the way I apply the behavioral analysis model or behavioral analysis method so that you can do it yourself and hopefully help yourself out in your personal trading. I'm going to start with the 60-minute chart, and then I'm going to end with the daily chart. So before I get started, real quick background. I know there are new members and also people who are watching the YouTube channel for the first time. And so basically, I created the behavioral analysis model, coined the term. We already had fundamental analysis and technical analysis. So I sort of created this behind the scenes just to use myself. I then was approached by a large hedge fund in San Francisco, California, that wanted to hire me and wanted me to apply this methodology internally over there. But I had to prepare a technical paper for the CEO during the interview process. If you guys want to look at that exact technical paper, you can go to just BAMinvestor.com, click on About, and then I think there's a tab that says More button. You can click that, and that's the actual full-length sort of technical paper that I put together for the CEO during the interview process right before I was hired. That used to be up on a Wikipedia page, but when I joined sort of the AMC community, someone on Wall Street somehow through a hack editor over at Wikipedia took the entire page down. So it was up for 10 straight years, and then it was taken down poof in one afternoon. But that's sort of the censorship complex, Silicon Valley censorship complex, and working for governments, working for Wall Street, working for sort of the powers that be. Anyway, prior to coming up with this, I started off using Elliott wave theory. I used to call over there late at night after I was done working to their headquarters in Gainesville, Georgia, Elliott Wave International, and talk to a young guy at the time named Jim Martens, who was working their late night currency desk. Now he's their top guy in the currency department, but I haven't talked to Jim in decades, but he was a super nice guy at the time. He used to take the time to kind of basically personally tutor me on Elliott wave theory. And then I would kind of give him some of my thoughts on using, kind of the early basis of what then, morphed into behavioral analysis. So one of the key things that I sort of discovered through studying the 1922 through 1933 stock market boom and bust period that led to the Great Depression in the U.S. was this concept of what I call hidden retest levels. I've said this before in other videos and interviews and everything else. The reason why I use the word retest is because I had just created all of these rules and all of these terms for my own personal use. I never intended to share it publicly. And if I would have known that down the road I was going to share it publicly, I would have used different words that have no application in regular technical analysis. In technical analysis, if you're familiar with it, say you have a price high here and price breaks out to the upside, the move back down to, that previous price high, that's typically called, a retest level. So mine are called hidden retest. And the reason behind that is because you won't see any price gap most of the time at the point of origin for the hidden retest level. So real straightforward, here's what causes a hidden retest level. You can take a look at any time frame candle and draw an uptrend line or a downtrend line. And if price has a fast market break through that downtrend line, in other words, price doesn't move down and then go through what I call a bull versus bear battleground, which I'm going to define over here in just a minute for you guys. If that doesn't happen, that means that that price level needs to be revisited at some point in the future. The tricky part is to figure out, when the revisit happens, the retest. There's another part of my model that's proprietary and I'm never going to share that has to do with generating these future zones of strength and weakness. And so what I end up doing on my side is trying to match up future zones of strength and weakness with unfulfilled hidden retest levels to get an idea of when that might happen. But so you can see here you had a fast market break of this uptrend line right here. I'll change this to a yellow uptrend line so you can see it, a white so you can see it more easily. So that break point right there, all you do is you shoot a horizontal line off of exactly where the price bar breaks that uptrend line. And you see that in this case it is 63,670. So basically that sets up a bogey. Once a hidden retest level is hit, I mark it as hit, and then you have that exact same level becomes what I call vibration. So it would look something like this using my TradeStation tool. And I'd lock that in place. And then I would know that I'm looking for a minimum vibration sequence of what I call an A, B, C, D, E. All that means is on the initial break, you count this as the A. So when price breaks a trend line, uptrend or downtrend line, I count this entire move as the A wave move. Has nothing to do with Elliott wave, A, B, C, D, E counting. So you move all the way down to wherever price makes its lowest low. And then as you move back up and make contact and move through, that's your B. And then you're looking for a C, D, E minimum. It can continue to vibrate, but you want to see that A, B, C, D, E minimum vibration sequence in order to assume that price is going to go ahead and continue an uptrend or reverse and move back into, in this case, back to what is the broader trend to the downside. So the general rule for trying to figure out whether or not a vibration sequence has lasted long enough in time to where you can mark it as complete, even if you can visually see what looks like an A, B, C, D, E vibration movement above and below that level, is that you can use a Fibonacci time tool. And so you see right here time extensions. And what you want to do is you want to go down to the point of origin low. So you start at the point of origin low, and then you want to drag the tool out until you see price break the particular trend line that you're studying. So in this case, this is our point of origin low right here. And then the break happens right here. So you see that trend line break right there, okay? And so the rule is that if you drag your fib tool from the point of origin low to the exact point at which price breaks that trend line, you want to be able to look at a 38% amount of time that it took for this entire move to unfold from point of origin low to trend break. So again, by using this fib tool, you can see that this little block of time right here would represent 38% of the amount of time compared to the entire move up into the break. I usually want to see that ABCDE vibration sequence happen at least through that entire 38% period of time. If it extends longer, like it did here, to a full 61%, that's fine. That's even better. But all that really represents is that the bull versus bear battleground, the indecision zone after a trend break, should last a certain amount of time to kind of prove that the market is sort of honest enough to where people aren't getting ahead of themselves as far as resuming a trend or reversing a trend. In a real market that's not algorithmically driven 100% of the time with excess liquidity, you should see this bull versus bear battleground. And then again, if you look at where the price break of this uptrend line takes place right here, and you can see this dotted horizontal yellow line, that represents the vibration level. The reason it's a vibration level as opposed to a hidden retest level is that as soon as price started to break, it started to vibrate. So it did not leave behind a fast market move to the downside, which then would have required a hidden retest, as in this case right here. So then you count your first leg down through the trend break as your A, your next leg up as your B, your next leg down through vibration as your C, D, and then this entire move is an E. But all we care about is that you went through an A, B, C, D, and then you went back below, price moved back below this vibration level. To complete the E, I mark it as okay. So everything about this is technically perfect, behaviorally perfect, meaning not only did you go through the minimum vibration sequence of A, B, C, D, E, but the sequence itself in time spanned at least 38% of the amount of time that was required to move from this point of origin low through that high and into that break. So textbook right there as far as if you want to really understand what you want to look for as far as a vibration sequence. The reason it's important is if you're at an important, this is sort of mid-range, right? You've seen Bitcoin move down, move up, and then lower low. So it's not quite as significant there, although it did give you a great, short side entry. But when you're looking at a vibration sequence take place on a price reversal low or a price reversal high, if you can go through that full A, B, C, D, E vibration sequence, it sets up a spectacular turning point trade because you have really tight risk-reward ratio as far as when you take a short or a long trade compared to where your stop would be above or below that turning point. And this is the kind of move that you can see at literally a turning point low that, looking back at it, turned out to be the best entry at a low or a high on a daily price bar chart prior to a multi-year trend. So it can put you in a position where you can really nail bottoms and tops, but at the same time not have to worry about being stopped out 10 times while you're trying to catch a turn. You want to wait for that vibration sequence to take place, the bulls versus the bears. The people who are trying to take a position too early are getting chopped to pieces. You're taking the trade basically right here. And again, one of the things that is a sure telltale sign of a completed vibration sequence and a perfect trade to enter is velocity. You want to see velocity reversals through these trade levels. So in the case of this, you see that sort of high velocity move up into this candle, leaves behind this tall tail, and then high velocity down. You want to see big red candles or big green candles, depending on which direction the vibration sequence is going to end in, telling you to grab the trade in the other trending direction. So that's what that looks like. Really quickly here, going back to the high in Bitcoin, which was posted in April, you can see a really clear fast market break of not only this uptrend line here, but this smaller degree uptrend line right here. And you see those fast market candles that are painted right here. That leaves behind this hidden retest at 70,396. There's another one right here, but no need to have two hidden retest levels stacked this close together. So I skipped that one right there, but you guys can clearly see that there's another one created by the fast market break of this uptrend line right here. This one, this break of this uptrend line right here gives you a really nice example of incomplete vibration. You have this fast market break right here, which creates a hidden retest back up at this level. You have a sharp reversal. You have a big, tall wiki candle there, which satisfies the hidden retest, but then leaves behind this vibration level, which is still hasn't been revisited to complete the vibration sequence. So if you wanted to think in terms of two different things, the vibration sequence you want to see completed, which is the ABCDE movement above and below the vibration level. But then also the time element has been already met, because you can see if you were to apply the fib tool to this uptrend line from the low to the trend line break, obviously I'm not even going to pull the tool out, but so to speak, but it would be it would look like this period of time right here. So obviously what you have here is an A, a B, and then you're in the C wave right now all the way into this low. That's why I've laid out this note here for myself. 68,700 is vibration D and E wave coming at some point, just to complete that vibration sequence of that fast market break that happened right here on call it April the 12th, with the retest also on the 12th, kind of into midnight my time here on the West Coast. So you can see where you can start to build these charts yourself without any technical indicators, any other tools whatsoever. And where it's really powerful is that if you can use either like the anemoy terminal, which is the tool I prefer, because obviously I built it and it's my other company, but if you can use either anemoy or use some other momentum-based tool that shows you bullish and bearish divergences, if you're forming bullish divergences into this low right here on either this time frame, these are hourly candles, or on a lower term time frame, and that gives you the confidence that you're going to see some kind of a reversal move, well, then this is your bogey you're shooting for. The other thing it'll help you, the way it'll help you save money, is let's say you're bearish Bitcoin from this entire decline, right? And even though you see a bullish divergence down here in a momentum indicator, you're thinking that you're going to short a fib retracement. So we go to our retracement tool and take a normal look at a fib retracement, and let's say you're going to try to short at a limit 50% retracement or even 61.8. If you know that this hidden retest level is sitting up here at 670, you'd be crazy to try to short a rebound, even if you're bearish within this bigger picture trend, because we know through this tool, using behavioral analysis, that there's a hidden retest all the way up here. And, that's above even the 76.4 retest level, which most of you guys know if you use fib tools. If you retrace more than 76% of the entire move, usually it means that previous price high, or your sort of point of origin for this whole fib study, isn't going to hold. That price is going to move right past that. So anyway, that's another reason why another way you can use this tool using behavioral analysis. Let me show you guys a couple hidden retest levels that are on the board right now. I'm not going to show you the timing element of the behavioral analysis model. I'm saving that for a follow-up members video I'm going to do. But in general, you have this hidden retest to the upside at 70,395, and then you also have this hidden retest up here at 73,125. And you'll see that I write a note here at some point, because again, I'm not going to talk about the timing element that the other part of my behavioral analysis model, tries to predict to match price along with timing window. You also have to the downside this hidden retest at 51,350. I'll show you the point of origin on that real quick, and then we'll move on. Here's your point of origin on this one. You can see this clear down, up, and then lower low. You have to have a down, up, lower low in order to have a valid trend line, the way I apply this methodology. So you can see this fast market break right here on this bar, and that is on February the 26th of 2024. Leaves behind a hidden retest level at 51,350, and so again, this is sort of in the category of at some point. We ended up trading to an all-time high, obviously. Off of that, within a fairly short period of time from February 26th into this top, which was, is that right, March 14th? Yeah. And so, again, it doesn't give you the timing element, but it tells you, hey, there's a pretty significant correction at the very least coming when price stretches all the way up into the 74 range, wherever it was. Where did it top? 73, high 73,000s. So that's what that looks like on the 60-minute. I'm going to carry you guys to the daily and show you some things that have me sort of a little bit worried about Bitcoin longer term and sort of looking over my shoulder. There are going to be people out there that are going to make an argument that Bitcoin can't you can't apply the same rules of either technical analysis or in this case behavioral analysis against Bitcoin, especially paired against the dollar because it's paired against fiat, and Bitcoin has nothing to do with that world, and it's never going to work. I hear this on Spaces all the time. All I can tell you is not only in the Anemoy terminal, but in everything I apply as far as behavioral analysis, all of it works exactly like it works for stocks, commodities, and other currencies. So, I personally believe that you can apply these tools, and I can see Wall Street running the exact same algorithms in the crypto world that they run everywhere else. So I kind of I'll have to agree to disagree with people on that one. Here's what's going on here on a daily bar basis. You can see this clean up trend line here off of the point of origin is the January 23rd low and the February 5th low. And then you can see this fast market break right here. That fast market break candle happened on April the 30th. So we knew that it had left behind a hidden retest level to the upside at 62,900. We just rocketed up and revisited that. So now you know that this is the A wave down. This contact up is the B. And now you're looking for a CDE as far as the timing window. Again, you just go point of origin low to the break, and you can see this is basically your timing window, which carries you out to June the 6th. So it would be sort of normal to need to at least vibrate above and below 62.9 for about another month to kind of fulfill that minimum vibration sequence. If Bitcoin were to fall straight away from here and move down to that 51,000 hidden retest level to the downside, then we wouldn't be then we would in the future be looking for a move back up, and that would be a D and an E wave that we'd need, because again, the move down through the break is your A, this would be your B, wherever we'd go would be your C, and then you'd need to do a DE in the future. So that would be bullish for Bitcoin, and tell you that if there was a stiff decline here ahead of us, that we could look forward to the idea of revisiting 62,900 to complete the minimum vibration sequence there. We already know, based on this note up here, that 70,100 vibration sequence is incomplete. That's because you can see from this uptrend line right here, you have a hard break here, what the old timers called a kiss back on that trend break. So that would be your A, your B. We're in the C right now. You need a D and an E there. So, that's encouraging. We already saw in that last view of the 60-minute chart that we have hidden retest up at the 72 level, I guess it was. So anyway, there are a lot of reasons to revisit. The other thing that's just a super dumbed down approach, but based on technical analysis, most of you know this, which is this idea of a third contact. So when you have a top like this, where you have your point of origin, all-time high, and then another tap right here on the recovery bounce high, and then a lower low, it sets in place this downtrend line, and you're looking for a third contact at some point. Now, of course, you could trade dead sideways for months and months and months and make the contact, right around the same levels you're at now. But more often than not, within a reasonable period of time, you'll make that attack of that downtrend line, even if this is going to turn into a bigger picture bearish downtrend as opposed to breaking through and posting a new all-time high for Bitcoin. So again, we have all these different things that are telling us that even if Bitcoin were to be slammed down to that 50,000 level to take care of that hidden retest level at the 60-minute basis, that we have a lot of reasons for Bitcoin to recover and move back up toward the highs, if not, through an all-time high, based on, all the different things that are elements of behavioral analysis, and then the dumbed-down approach of just a third contact on this downtrend line. Let me show you the one thing that has me more concerned in Bitcoin, even more concerned than the fact that we have this hidden retest at, call it 39.9, something like that, is the fact that we've got some hidden retest levels that were created way back at much lower levels. Again, if somebody wants to argue that the same rules of behavioral analysis don't apply to Bitcoin, I wouldn't, that wouldn't be the hill I personally would want to die on myself, because, it's a fairly new vehicle for me to be analyzing, and I just don't know. I don't have, data back to 1913 like I do in the Dow to make me more confident that these levels will be seen. But just to give you guys a heads up and something to kind of, think about down the road, if Bitcoin does start to, trade off significantly from whatever all-time high it posts. We do have a very clean hidden retest at 22,000. You can see this downtrend line here, that fast market move. People that study technical analysis also are going to, know that there's a gap down here. So that's a really, obvious thing to look at. And most people that study technical analysis are at least cautious about gaps that are left behind being filled. You also have this really, really obvious fast market move that left behind a hidden retest at the 18,000 level. Your point of origin on both of those, point of origin on this 18,000 hidden retest was January 12, 2023, if you want to look, and the point of origin on the 22,000 retest is March 13th of 2023. Here's one that has me even scratching my head more. And by the way, if you guys were members of the service, of the my cryptocurrency service, Bitcoin service, you know that when the Bitcoin was trading at an all-time high in November of 2021 at the 69,000 level, and people were, talking about 100,000 and a million and all these other things, I was talking about this hidden retest at the 19,000 level. I caught a lot of hell on Twitter for making that number public and laughed at and everything else. Matter of fact, we had a hidden retest at 18,000 that was coming from a 60-minute model, I believe. This is a daily bar chart model, but I'll show you point of origin on that 19,000 hidden retest level, and it's right here. So when you look at this, it seems like a really insignificant little trend. I mean, the entire trend, if you look at it, only spans, let's look at it, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, something like 11, 12 sessions. But then, you clearly have this break. You left behind a price gap down there that probably had the attention of, some technicians. But it leaves behind this clear hidden retest level using behavioral analysis. And that was the reason why, along with sort of, like I said, the proprietary part of my model that gives me future zones of strength and weakness, I had a lot of zones of weakness on the board. I had a complete topping count up here with a little extension, and then I had this hidden retest at 19,000 that ended up being hit. We then went through the full vibration sequence here, so all that was taken care of. I'm going to take you back to something that has me even more worried long-term in Bitcoin. And again, I know people will give me hell for this. I even have my doubts about this. But I'm going to be kind of looking over my shoulder and thinking about this down the road, especially if government step in, or if there's, any kind of power grid issues, or, you know how these things are, how many enemies Bitcoin has as far as governments and, this whole green, clean energy movement, everything else. You could see where there might be some problems down the road. But here you go. You have this clean downtrend line right here and another one right here. And you have really obvious hidden retest level left behind at 4,000 and then one at 4,600. Now, the one at 4,600, the interesting thing about that is that you do have contact right here. So you see this fast market break. They moved Bitcoin into what would have been the all-time high June 26 of 1919, all the way up at the, let's call it 13,868 level. Then you have this tremendous crash leg here down into our 4,600 hidden retest level. What that means in the bigger picture for the vibration sequence is this is your A leg, this is your B, and basically into the recent all-time high, we're in a C. So even based on incomplete vibration sequence, you'd need a D and an E back at the 4,600 level. Even more concerning is the fact that you have, again, this hidden retest all the way down at the 4,000 level, which, technically was hit right here, but again, leaves behind this idea of an A, B, recent all-time high is a C. So it would require moving all the way back down to these two levels in the future. Again, I'm not the hill I'm going to die on. I have no clue whether or not that's going to happen, but, it'll be in the back of my mind for sure if governments start to set regulation, based on competing with fiat, or what concerns me a little bit more is just the power consumption behind Bitcoin. So there you go, you guys. I wanted to combine sort of a up-to-date forecast on Bitcoin, not so much a forecast, but showing you from a behavioral analysis perspective where sort of hidden retest levels lie right now and where incomplete vibration sequences lie. And then at the same time, be able to post a video publicly that shows you very clearly how I apply at least this concept of my behavioral analysis method, so that you can apply it to long-term charts yourself. I think personally it can help you tremendously in the stock market. If you're thinking in terms of trying to invest in a stock that's gotten away from you, say a stock that Apple, Nvidia, whatever that you think is would be a great investment for you or your family down the road. If you can apply some of these longer-term uptrend and downtrend lines and come up with hidden retest levels and things like that, it can give you a bogey to shoot for in the future, and then you can set price alarms or whatever. If some of these are hit, obviously it's going to look like the end of the world, but that's always the best time to invest. And when things look the best to the upside, that's when understanding some of these downside hidden retest levels that might represent a 60, 70, 80% decline in a certain ticker symbol also come in super handy, because it'll hopefully prevent you from full-blown FOMO into an exact top if you're going to have to take a 70 to 90% haircut in a long-term position down the road. So that's what that looks like, you guys. Hope that was helpful. And if you have any questions, you can post it in the comments, and I'll try to circle back and answer those. That's it from my side. Good luck, everybody.